Today's episode, I'm going to teach you the simple scalping strategy that I use in my own trading.
You just watched Ross Cameron from Warrior Trading introducing an exciting scalping strategy. Now here's the twist. I'm going to simplify this strategy into easy, actionable steps that you can immediately apply to your own trading. This is not just any strategy. It's one that's simple enough for beginners to use effectively, yet powerful enough to be employed by many successful traders. With an impressive 85% success rate, this strategy has transformed the trading journeys of countless individuals. Stay tuned until the end of the video for a surprise giveaway. You won't want to miss it. We'll start by breaking down the core principles of this scalping strategy. I'll show you exactly how to set up your trades, manage risk, and find the best opportunities. By the end of this video, you'll have a clear, actionable plan that could make a real difference in your trading. This strategy is all about using pullbacks in the market to enter trades at better prices and capture quick, small profits. It's designed to work well in different markets. Whether you're trading stocks, forex, commodities, or cryptocurrencies, the goal is to trade in the direction of a strong trend, but wait for a small pause or pullback to get a better entry point. By doing this, you reduce the risk of entering too late when the price is already high or low and could reverse. Now let's break this down step by step for better understanding. First, you identify the trend. This means figuring out whether the price is moving steadily upward or downward over a certain period. You can easily spot trends by looking at a price chart and seeing if the market is in uptrend or downtrend. An uptrend means that the price is making higher highs and higher lows, while a downtrend is the opposite. The price is making lower highs and lower lows. These trends show that there is strong buying or selling pressure in the market, and we want to trade in the same direction as the trend. Next, instead of jumping into a trade when the price is at its peak in an uptrend or its lowest point in a downtrend, you wait for the price to pull back slightly. This pullback is a temporary pause in the trend where the price moves in the opposite direction for a short time. In an uptrend, it means the price dips a bit, and in a downtrend, the price rises a little. These pullbacks are important because they give you a better price to enter the market. If you buy at a lower price during a pullback in an uptrend, you stand a better chance of making a profit when the price continues upward. Once the pullback happens, you need to wait for confirmation that the price will continue moving in the original direction. This is key to the strategy. Confirmation could come in the form of the price breaking above or below a certain level or showing signs of increased buying or selling pressure again. For example, in an uptrend, you might wait until the price moves up past the high point it reached before the pullback. This signals that buyers are back in control, and it's a good time to enter the trade. After you enter the trade, your goal is to take advantage of the continuation of the trend for a quick profit. You're not looking to hold the trade for a long time or wait for a huge price movement. Instead, you aim to capture a small gain and then exit the trade before the market has a chance to reverse or pull back again. This is why the strategy works well for short-term traders who want to make quick trades without holding positions for hours or days. A crucial part of this strategy is risk management, which helps protect you from big losses. The best way to manage your risk is by using a stop loss, which is a predetermined price level where your trade will automatically close if the market moves against you. This ensures that if the price moves in the opposite direction of your trade, you don't lose more than you can afford. For example, if you bought at a certain price during a pullback in an uptrend, you would set your stop loss below that entry price. So if the price drops instead of rising, your trade closes automatically, minimizing your losses. Now let's bring this to life with an example using gold. Imagine you're watching the price of gold and you notice that it's in an uptrend. Over the past few hours, the price of gold has been steadily rising from $1,950 to $1,970. But instead of buying at $1,970, the highest price so far, you wait for the market to pull back. Sure enough, the price drops slightly to $1,960. This pullback is your opportunity. You keep watching the chart closely, and after a short pause, the price starts to rise again. When the price moves back up to $1,965, you take this as a confirmation that the uptrend is resuming. So you enter a trade at $1,965, expecting the price to continue climbing. As the price reaches $1,970, you decide to exit the trade, locking in a quick profit from this small price movement. If you're finding this video helpful, don't forget to subscribe and click the bell icon to get more insights and strategies that can boost your trading success. Back to the video. In this scenario, you've used the pullback to get a better entry price and waited for confirmation that the trend was continuing before entering the trade. You weren't aiming for a massive profit, but by exiting when the price reached $1,970, you made a small small, quick gain. At the same time, you had set a stop loss at $1,960. So if the price had dropped below that level, the trade would have closed automatically, limiting your loss. This strategy allows you to capture consistent, small profits by trading pullbacks during strong trends. It's simple and avoids predicting big market moves or holding trades for long periods. By sticking to the trend, waiting for pullbacks, and managing risks, you can trade confidently and keep losses small. It's an easy-to-follow plan for beginners that helps avoid entering trades at the wrong times. Now here's an exciting offer. I'm adding the first 100 people to my premium Discord channel for free. You'll receive daily high-accuracy signals for forex, crypto, and stocks, and gain access to a paid trading course at no cost. Our members are seeing significant profits, so make sure to join now through the link in the description. And if you want to take your trading to the next level, check out this video for a strategy that pairs perfectly with what we just covered. It's a game changer for boosting accuracy and maximizing your profits. Don't miss out. Click to watch now and enhance your trading skills even more.